You mentioned market cap weighting, and there's a lot of different ways that indexes and ETFs are weighted. Market cap, probably the most popular. There's also equal weight, there's yield weight, the list goes on. But why is it important to understand that the S&P is market cap weighted, and how is it really impacting the market or the index today as we see it?
Yeah, so market cap weighting, I think, has kind of a philosophical simplicity and also an investment simplicity. And from a kind of philosophical standpoint, really just more of a monitoring the market standpoint, what does it tell you, right? It's the sum of all of the market caps of all of the companies that you're exhibiting. That tells you essentially the total value of the stock market, right? If I want to see the total value of the market, I take each company and multiply its shares by the price and add those up. So it's very simple. And I think that makes it also very comparable over time periods, right? You can see today versus any date in the past, how much has the market grown by looking at the market cap of the 500, for example. So an economist or a journalist or anybody measuring the markets might want to use that very precise way with the standardized history, right? Now, when it comes to implementation in an index fund, as you know very well, this creates a bit of ease for the managers. Now it takes a bit of skill to manage even a cap-weighted index fund. We know this, but from a turnover standpoint, there's not a lot happening, right? You're letting the collective wisdom of the market determine what each stock is worth, its weight rises and falls. That doesn't require PMs to do constant trading. The only time they really have to bring security in or out is when there are changes in construction, right? Additions or deletions. And so cap-weighted indexes are simple in that standpoint, and we've seen through some of the work we've done on in SPIVA, which we'll talk about later, for example, we've looked at post-tax SPIVA as well, and you see funds that have a lot of trading activity are generating taxable gains. Cap-weighted index doesn't really do that, and so there's an advantage there from a simplicity and implementation standpoint.